For roughly a decade, cap rate compression covered a lot of mediocre operations. Here is what that means in practice. For example, a sponsor would acquire a property at, say, 5 or 6 cap, hold it for 3 years, execute some combination of light renovations and rent increases, and sell it at a 4 or 5 cap. The exit produced a substantial gain. Investors hit their target IRRs, the sponsor's track record grew and improved, the next race filled faster than the last, and so forth. Some of that gain was real operational improvements. I want to make that clear. Better property management, renovated units, improved leasing, reduced delinquency, genuine value add that was created. However, a lot of it was not. Cap rate compression by itself created roughly 20% asset value appreciation independent of any operational improvements. A property that traded at a 6 and exited at a 5, or 5 versus 4, had a 20% valuation boost, which is not the same as NOI boost. And this created a phenomenon worth naming. Sponsors learned to acquire and dispose. Acquisition teams grew, disposition strategies got more sophisticated. The hold period middle, which is where operations actually live, received less attention than it deserved because the math worked. Time periods were compressed, even when operations were average. That worked. What did average operations look like? It looks like deferred maintenance that carries longer than it should, property management teams not held to clear performance benchmarks, tenant retention left to chance, expense management treated as a quarterly review, sometimes not even that, rather than a weekly discipline, capital improvement tied to coincident with refinance or sale rather than property conditions. Most LPs never really knew the difference because the returns came in at or above plan. The plan worked because the market was lifting everyone. The plan was not, in many cases, a real plan. It was a market bet wrapped in the operating narrative. That cycle ended cap rate compression. Cap rates began expanding after the 2022 interest hike. They've continued expanding through 24. Suddenly, that 20% valuation lift that had been quietly doing all the work in almost every business plan reversed into a 20% valuation drag, and sometimes more. Properties acquired at a 5 cap were appraising at a 6 or 6.5. The same NOI now supported a meaningfully lower value. And sponsors who had built actual operating businesses absorbed the headwind because their operations carried the property through the down cycle. Sponsors who had relied on cap rate compression discovered all of a sudden that they had no operational floor. The building still had tenants and maybe produced cash, maybe didn't, but the cash was not enough to service the debt if it had enough cash flow to fund the reserves, to fund distributions to investors, capex at the projected levels. And so something had to give. So the lesson for the next decade is structural. Cap rate compression is not a strategy you can repeat. It happened, it may happen again, but not on the schedule any sponsor can control. What can be controlled is operation, tenant retention, expense discipline, capital deployment, asset positioning, and so forth. The sponsor whose returns historically came from the market needs to learn the work, and a sponsor whose returns historically came from operation is already doing it. So for LPs, the question worth asking now is the following. When you Look at a sponsor's prior deals. Can you separate what came from operation versus what came from the market tailwinds? The 2021-2024 cycle gave us a clean test. So if their pre-2022 deals show strong returns and their 22 to 24 deals show meaningful struggle, the sponsor is likely benefiting substantially from the market more than perhaps running the business. And what separates the operators from the speculators in your view of this cycle? Let me know in the comments, and I'll continue the series because I have something big that I have been working on to help investors who want to weigh operations correctly, and that's coming in the next few days. So stay tuned.